Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Yeah, so I think we're all just going to have to accept the fact that I am never, well, not never, but I will not be getting the Christmas music, bumper music, theme music. There we go. Up in time. There's like 3 shows left. I don't think it's going to be it. Well, we'll see. Maybe over the weekend. But welcome, everyone, to this festive edition, even without the music, of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories of the day that are moving mortgage rates in Wilmington. And woo, boy, we got some news for you today. Also, I want to let you know that for those watching, yes, I am wearing my backup headphones. I don't know what I did. I did a off-site podcast recently, and so I took all my equipment. It might be in my car, but I didn't have them, and I don't like these as much. So there's a lot I'm dealing with here equipment-wise. I don't have my bumper music. I don't have my head. And it's funny is it's not like I have a team of people. It's me. It's like I'm blaming myself here on the show. But all right, enough about me. Let's talk about what happened today. Big inflation report. Delayed CPI report. Now, this is for the month of November. If you remember, we got a September report. Government shutdown happened. We got a late September report into the shutdown. No October report. We're never going to get that. That is gone into the ether. We will never know what those numbers were. They will not be released. But we got a November report, and it was quite the surprise to the downside. So consumer price growth slowed to 2.7% year over year. Oh, by the way, we didn't get month over month data either for November, just year over year data. Consumer price, I'm struggling. Consumer price growth slowed to 2.7% year over year, down from 3% in September. And that's the lowest reading since July. Economists were expecting that number to rise to 3.1%. So quite the miss by economists there. That's a to be off by 0.4%, that's a pretty big miss. And so that's why we're now, a little bit debate has begun in the economics community and political community, of course, because now we live in this world. It's probably been this way for a while, but now some people just don't trust the economic numbers. Whenever your guy is not in the White House, the other side doesn't trust the numbers. So like when Biden was in the White House, Republicans were like, I don't trust these numbers. And now we're seeing somewhat of a reverse of that. So we get numbers come out and people are like, whoa, I don't know if I trust those numbers. But let's talk about the numbers. So headline number 2.7, down from 3%. Food prices 2.6% year over year, down from 3.1% in September. Lowest level since February. Energy prices actually up 4.2%. Kind of a big jump from the 2.8% that we saw in September. That is the hottest level since February 23. So the one outlier, energy prices on the up and up. Core inflation, 3%. That was down from 3.1% and lowest level since June. And then shelter inflation at 3%, the slowest level since August 2021. And that's kind of the interesting part here. So shelter inflation's been very sticky, and it's kind of the reason. I think it makes up, I think it's like 2/3 of core CPI, something like that, or 1/3. It's a very large amount of the inflation data, and it has been sticky, which has led to the inflation numbers being sticky. And so the fact that that is now finally cooling is one of the reasons why you are seeing that year over year number drop so much. However, this is where the controversy comes in. So Diana Swong told the AP that the report, this is before the report came out, or I should say it was after, says that the report was likely distorted because of the government shutdown and the data collection and everything else. But she noted that the good news is that it's cooling. We'll take a win when we get it. So she's like, listen, there's going to be some issues with the report, no doubt about that. But hey, it's a good report, and we're going to take it. Now, Omar Sharif of Inflation Insights was less convinced and not really buying that argument. He pointed to technical issues in rent and owner's equivalent rent. That would be the shelter cost that we were talking about. And he's actually predicting a rebound in December, saying, quote, that should bounce in December. So he's saying that because of the way that they calculated the shelter costs, it fell more than it probably should have. He noted, saying, quote, major issue was zeroing out rent and owner equivalent rent in October. That will artificially lower year-over-year rates until April, assuming no BLS adjustments. Other issue is weaker prints for a lot of core goods, ex-autos due to price collection only in 2H. November, so more discounted sales. So basically, November, some more discounts in sales. So what he's arguing is that there's a lot of problems with the data collection. And the one that got the most attention was the fact that they zeroed out October, where, yes, I mean, I look at data every day, and there is signs that we are, just housing in general has slowed down. We are hearing about home prices falling in a lot of areas. Year over year national data, we're pretty close to almost 0%. We're hearing about rents that are falling in a lot of places. And so you could make the argument that we're at 0 in October. A lot of people are going to say, it probably should have been higher, but that's basically what they did, was they zeroed out October. And then because essentially, how do you get year over year numbers? Well, you're looking at what's happening month over month and the growth that happens therein. And so what's happening is that when you have a very low month like October, it could then artificially lower the numbers. That is the argument that's being made. And I think that's why we're not seeing a bigger drop in the 10-year, because the 10-year is down about 3 basis points, which is great. We're at the lowest level. 10-year yields at like 4.12%, lowest level since I think the beginning of the month. So pretty good. Mortgage News Daily, they have the 30-year fixed rate at the lowest level since the end of November. So good, but to have such a good report, I mean, this is pretty phenomenal. 2.7%, moving closer to that 2% target. We even saw some adjustments now to the projections on what's going to be happening at the next Fed meeting, when it looked like we weren't going to be getting a cut until June, if not later in the summer. Now saying, maybe we could get one in January if these inflation numbers hold up. And so I think that what's happening is that you're seeing markets accept the data, but they're like, you know what? We got to wait and see. Because we actually don't know. I mean, there's a lot of unknowns in the way the data was collected and everything else. And here's the thing. This is what I said earlier. Because Steve Mirren, of course, that's Trump's pick, latest pick to be on the Fed board, the Federal Open Market Committee. He was saying, hey, it's great. Everyone's questioning these numbers, but where has the skepticism been when the numbers were on the rise? Talking about shelter in particular, saying that seemed to be overestimating where we were, and there's too much of a lag in that shelter data. Now, a lot of people would say the lag is there intentionally, because that's usually, home prices don't tend to move as fast as they did during pandemic. And so we had big swings one way or the other. It took it too long to counter what was happening in housing, and then too long for it to fall off. It's like I said, this is a big debate. And I do think, though, I mean, here's the way I look at it. You can always make an argument about, is this not being done correctly? Is that not being done correctly? I'm going to trust the institutions. I'm a fan of institutions. And so I'm going to say, listen, I never doubted the numbers when, any president's been in office. So I'm not going to be like, well, now Trump's there and he's manipulating. I'm not going to do that. So until there's definitive proof that there is something going on, which has never been shown. People have made these accusations forever. Obama was the numbers, Trump was messing the numbers, Biden was messing the numbers, now Trump's messing the numbers again. I don't have any evidence of that, so I am taking this report as is. It's a good report. I do think the markets are, and it's, once again, I don't think it's, if there is an issue, I don't think it's intentional. I think it's just because of the government shutdown and the fact that we're dealing with this government shutdown and how long it was and the lack of data collection and now compiling the data, having to fill in the gaps is just always going to be a nightmare. And so we're going to find out. December report is going to tell us in the start of the new year, was this the sign of a new trend or was it an anomaly? We are going to find out sooner rather than later, is my point. So, it's funny watching everyone, who was like, how dare you question these numbers under Biden? And now they're like, oh, I don't think these numbers are real. All right, before we go, we got to talk about what's happening with central banks. I've been talking about it all week. European central banks are heading into 2026 on very different paths. So today we had the Bank of England make their announcement. We knew that was going to be happening. However, it was a very tight vote. The Monetary Policy Committee voted 5-4 to cut the benchmark rate from 4% to 3.75%. The fourth cut this year. This, of course, comes after data showing that inflation is easing in the UK. The MPC acknowledged inflation is still above target, but said now it's expected to fall back towards target more quickly in the near term. So we got the Bank of England cutting rates today. European Central Bank also had a decision to be made, and they decided to hold rates. ECB President Christine Lagarde said that monetary policy is, quote, in a good place, but cautioned that the comment should not be interpreted as a commitment to a fixed or predictable rate path. And then later today, the Bank of Japan is expected to raise their benchmark rate to 0.75% from 0.5%, which they raised it to in January. They've been holding steady for the whole year because of issues about tariffs and then wage growth. They wanted to really understand what was happening in their country. And now they do believe that tariffs have not been as big of an issue. Wages now are an issue. And so now they're going to raise rates. And what's crazy is that this is going to be the highest level in roughly 30 years. And we've talked before on this program about Japan. Japan is the largest holder of U.S. debt. The yen carry trade is a big part of the treasuries. With regards to buyers of the treasuries, people taking advantage of the low interest rates in Japan, borrowing money there, converting it to dollars, buying treasuries. And so as rates rise in Japan, we could see a sell-off of U.S. treasuries, which could cause rates to rise unless a buyer meets that same demand. Because once again, Japan, largest holder of U.S. debt. It is not China. It used to be China, but it's now Japan. So a lot of moving parts globally. Of course, all these things can impact us because, like I said, people are borrowing money in other countries or, all of a sudden it makes more sense to put your money in another. It impacts us. But we got to cut, hold, raise. 3 central bank decisions, all making different decisions. Very interesting. All right, you guys enjoy your weekend. Probably the last of the Christmas parties. I know I got my last Christmas party on Friday, and then I am donezo getting ready for Christmas, and then, of course, the dead time between Christmas and New Year's. We'll be doing shows, though. We will be doing shows next week, and then maybe between Christmas and New Year's. I think there'll still be data out, so we will see. But you guys enjoy your weekend. We will see you Sunday night for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.